Gold, whether it's a tiny extent or to a larger extent, plays a part in everyone's portfolio. Partly because, look, we're dealing with humanity, we're dealing with a lot of unknown factors, a variety of variables that can change the picture tomorrow. We've seen everything from stock market crashes to war, instability, chaos. Gold and silver in their physical form tend to be a great diversification as part of a totally diversified portfolio. Yes, have the bulk of your assets in things such as stocks and bonds, mutual funds, ETFs, and all the rest. I certainly do, but having a portion related to gold and silver, the physical, helps to give you a measure of diversification that are not in many portfolios, but should be. Well, gold is best held over a variety of periods. There are periods of time for gold where it doesn't do as well, because maybe there'd be long periods of stability, prosperity, and general peacetime. In terms of physical gold and silver, the most primary ways to hold them are either in what are called bullion coins or in bullion. Millions are bought and sold week in and week out across the globe. They're easy to buy, they're easy to sell. ETFs are a more convenient way to do it if you're talking about inside a portfolio. There are plenty of gold and silver ETFs out there to choose from. I always tell people, just make sure you read the fine print that it's a type that has, a full allocation to the physical metal, because that will give you a level of safety. Because there are some ETFs that might be into gold or silver futures. Futures and options that are on gold and silver, these are basically like making bets in the short term. And as you know, the short term can be all over the place. You can have the greatest asset on the planet, go down. You can have the worst asset on the planet, go up. The short term can be very irrational. So this requires more diligence, more experience that the average investor either can't or shouldn't be involved with.